Hi guys, welcome to today's trade of the day. And for today's trade of the day, we'll be focusing on the Aussie dollar. Now, why I chose this pair is because we are seeing quite a bit of weak demand coming out from the commodities market, such as gold and even oil. And we know that Aussie is a oil-related currency. At the same time, Donald Trump is looking to reopen the US economy, and we have no idea what that means for the US dollar. However, it is good to note that recent times since the coronavirus outbreak, the US dollar has been strengthening greatly. So in order to find out what pairs to play, I would think that the Aussie dollar would be the best conduit to play this pair. So with that, let's look at the Aussie dollar. Now, what I like to do is I like to take this top-down approach. That means starting from the monthly, moving down to the weekly, to the daily, and then refining the strategy on the 4 hours and possibly even the 1 hour. And what we do for every time frame is the same, repetitive but important. On a monthly, we look for the long-term resistance and support. Weekly, we look for weekly resistance and support, daily resistance and support, and then we refine it on the 4 hours. All right, if that's clear, let's start by looking at the monthly chart on the Aussie dollar. Now, the Aussie dollar, what we like to do is actually to focus on the current price action here. In technical analysis, it's important to know what happened in the past. However, what's important is actually the current price to tell us whether prices will go higher or prices will go lower. With that, let's look at the monthly chart over here. Now I see that price actually make this huge spike here on the monthly. Let's call this the support. On the monthly, there's this huge spike here before a quick rejection at the 55,105 area. Let's call this our long-term support. And we can see that price actually made a high here before trending downwards since sometime in August 2011. And if I were to put in close, I actually see sort of according to Elliott wave, 5-wave impulsive down. So there's a 1, 2, 3, wave 4, and wave 5. So we want to know whether wave 5 has reached a key level. What we do is basically to take a Fibonacci extension of the wave 1 to 3 and then back to 4, and then we find out how far wave 5 can go. So with that, let's do a Fibonacci extension from the top here to here and to here. And we see that the Fibonacci extension shows that the long-term support falls right in line with the key Fibonacci ratio of 61.8 extension. Right, so this is clearly a strong Fibonacci ratio level and graphical support level. Now we want to look for a retracement to see how far price can bounce higher after making this push down, and we want to find the long-term resistance. So with that, we can take a retracement from the swing high here to the swing low, open up all Fibonacci ratios, and we see that the 61.8 key Fibonacci ratio comes quite close over here twice. And in fact, if we were to extend it further back, it moved around this area as well. So we'll use the 61.8 Fibonacci ratio, and then we'll put in our graphical line. And that's sort of a line here. Let's call this our long-term resistance. With that, let's go down to the weekly. Let me just open this chart further so it's easier for you guys to see. Okay, so on the weekly, we see that prices are still making lower highs. That means that we are ultimately still in a downtrend, right? However, over here, we see that price made a push down and then a sharp rejection of the long-term support. So we want to see how far price can go up. We want to look for our weekly resistance. So we take a Fibonacci retracement from this swing high to this swing low, and we open up all Fibonacci ratios. Now, there are two key levels. One is, if I were to zoom in for you guys to see, at a 61.8 key Fibonacci retracement level, price sort of paused here, and price tested and rejected off here. At the 78.6, price held at this level here, tested at this level here, and even further back, price held at this level. So 78.6 seems stronger than the 61.8 retracement ratio, but it's important to note that we have a 61.8 there. Like I said, the 78.6 seems stronger, so I will just highlight that one. Keep in mind the 61.8 is still there. We might find it on the lower time frame. So I'll put in a resistance level, and we can call this our weekly resistance. Now we want to look for a weekly support, right? Price actually made sort of a bounce up, and if price were to come to the weekly resistance, we want to see how far price can pull back. Likewise, price is testing the 61.8 now. We want to see how far price can actually pull back. So we take a retracement again from the swing low to where price currently spiked, and we open all Fibonacci ratios. Now it's interesting to note, like the 61.8 and the 78.6, now we have 50% price testing this area, and at the 78, price also tested and rejected above this area. So I would rather take the 78.6 because it looks nicer here due to the spike. So I'll put in a level here, and I'll call this the weekly support. Now that we have our weekly support and weekly resistance, let's go down to the daily. Now give me a moment as I tidy this up for you guys. Okay, while I tidy this up, bear in mind the key levels and how we got them. Okay, so we want to focus on the recent area here. Now, we said that on the weekly and the monthly, ultimately price is in a long-term downtrend, but that also means that on the daily, we might see a limited push up towards the weekly resistance or the 61.8, which we found earlier, and price could make a pullback. So what we want to do on the daily is to find a daily resistance and daily support. Let's look for resistance first. So price made a push up here, made a small pullback, and another push up. This is a zigzag pattern where we can use our Fibonacci extension. Swing low to this point and down here again. Open up all Fibonacci ratios, and we see that price is actually testing and rejecting the 61.8 level, right? And the next key level in golden, the 100%, falls in line with the weekly resistance. So with that, we can keep these two levels. Keep these two levels, and I'll put my daily resistance over here. Let's call this the daily resistance. Now, price seems to have formed a bearish engulfing candle here, and it also rejected off the daily resistance. We want to see how far price can push back lower. So this entire move up, we have already taken the retracement, and the retracement that we found is the 78.6. But on the shorter term time frame, we want to see whether there are any other retracement levels to look out for. So to open all Fibonacci ratios, there's this 50% graphical level here, which falls in line with the recent swing low. So let's just highlight that 50%. And let's call this our daily support. So remember, we are bearish, and ultimately we say that price will push down lower to at least the weekly support. Now price is holding below daily resistance. It can either push up to a daily resistance before showing a pullback to the daily support and even the weekly support, or price can actually push up towards the weekly resistance and make a pullback towards the daily support or weekly support. So how do we fine tune this strategy? We go down to the 4 hour. All right, 4 hour, we can remove the long-term resistance and ignore this level, right? And we can ignore the long-term support because it is quite far away. So what we want to do now is we want to see that where is the best point of entry that we can find. And what I have here is if I were to draw a ascending trend line support connecting the lows, we'll see that, let me change this line to red because now it's actually a resistance. We see that price was actually holding steadily above this ascending trend line. But when it came here, it broke below, and now there's a pullback to test. So this is actually a very powerful signal. It's called the trend line breakout and pullback strategy. So this is the pullback we're looking for. And now that there's a rejection, we expect price to go all the way down, right? So what I will do is I would actually have a sell entry anywhere here. This will be my sell entry. All right, and my daily resistance will also function as my stop loss. Why I say my daily resistance is my stop loss? Because the distance to the weekly resistance is still quite huge. Should price close above the daily resistance, I will immediately go long and play for this target instead. So that's my alternative case. Otherwise, this is my sell entry. My stop loss is here. I will play a bearish drop down to my daily support. And my daily support will be my first TP number 1. Once price actually reach my TP number 1, I will take partial profits, either 50% or 75% of my position, and then I'll move my stop loss to my break even, right? So my position is completely protected. Then I let the remaining position run all the way to my weekly support, which is my take profit number 2. So that's all I have for the trade of today, guys. We're bearish on the Aussie dollar, and take care, and we'll catch you again the next time.